This video is on frequently asked questions on Form ITR 3. Form ITR 3 can be used by those individuals and Hindu undivided families who want to report their income under any head of income, including profits and gains of business and profession, and who are not eligible to file Form ITR 1, ITR 2, or Form ITR 4. Before moving to the frequently asked questions on Form ITR 3, let us look at the key changes as compared to assessment year 23-24. The biggest change is that with the amendments in Section 115 BAC, the new tax regime is now the default regime, and the taxpayers having income under the head profits and gains of business and profession and wishing to opt for the old tax regime must explicitly do so by filing Form 10 IEA. Another change in ITR 3 is that now the form requires taxpayers to mention their applicable due date for filing ITR. This will enhance the clarity on filing timelines. For taxpayers who are liable for tax audit under Section 44AB, additional details regarding circumstances necessitating tax audit are required to be furnished in Form ITR 3. For taxpayers who are eligible startups claiming deduction under Section 80 IAC, new details are required to be provided in Schedule 80 IAC. To incorporate the changes in the Finance Act 2023 and to claim the enhanced turnover limit under Section 44AD, the taxpayers are required to give the details of receipts in cash column for the presumptive taxation scheme. Mandatory information regarding recognition as MSME and related registration number is now required to be provided in Form ITR 3 for taxpayers filing their ITR in the old tax regime and claiming deduction under Section 80DD and Section 80U are now required to file a new Form 10IA to claim the deduction. Schedule Other Sources has also been amended to include income from online gaming taxable under Section 115 BBJ. Let us now look at the statutory forms applicable for Form ITR 3. Form 3CB, 3CD is applicable on proprietorship and partnership firms filing income under the head profits and gains of business and profession and who are required to get their accounts audited as per Section 44AB of the Act. They are required to file Form 3CB, 3CD if they are not required to get their accounts audited under any other law. The due date to furnish audit report is on or before 30th September of the relevant assessment year unless otherwise extended. Taxpayers reporting income under the head profits and gains of business and profession and opting out of the new tax regime are required to file Form 10 IEA if they wish to opt for the old tax regime. After submitting the form, the taxpayers would be getting a 15-digit acknowledgement number. You cannot proceed to file ITR 3 in the old tax regime without mentioning this 15-digit acknowledgement number. Please note, individuals and HUFs with business income have to file Form 10 IEA before the due date of filing income tax return if they choose to pay their taxes in the old tax regime. Form 10DA is a mandatory form to be filed to claim deduction under Section 80JJAA of the Income Tax Act. Section 80JJAA provides a deduction from the profits and gains of business and profession of 30% of the additional employee cost for the 3 assessment years. The due date to file Form 10DA is before the due date of filing income tax return. Taxpayers on whom provisions of alternate minimum tax are applicable are required to obtain a report from a chartered accountant in Form 29C certifying that the adjusted total income and alternate minimum tax have been computed as per the provisions of the Income Tax Act. The report is required to be furnished on or before the due date of filing income tax return. Please note, Form 29C is required to be filed only if the taxpayer is opting out of the new tax regime and paying the taxes in the old tax regime. Let us now look at the prerequisites of filing Form ITR 3. You should be a registered user on the e-filing portal with an active PAN. You must validate your bank account and nominate it for refund. You should have a valid digital signature certificate or a valid mobile number linked with the e-filing portal, Aadhaar, your bank or depository for the purpose of e-verification. And if you're opting out of the new tax regime and filing your taxes in the old tax regime, you must have filed your Form 10 IEA, and the taxpayer is also required to file other applicable statutory forms before filing the income tax return. Form ITR 3 can be filed either in the online mode or through the offline utility. Let us now look at the grievances which are being received on Form ITR 3 and their resolutions. The first grievance is that while claiming exemption, I'm getting getting an error that exemption under section 10 subsection 10 for gratuity shall not exceed income offered under the head salary under subhead gratuity receipt and cannot exceed rupees 20 lakhs. The taxpayers are required to ensure that the breakup of gratuity income is added under the scheduled salary after adding the gratuity drop-down under salary chargeable under section 17(1) for claiming the gratuity allowance and then file the return using latest offline utility or through the online mode. Another query that is being received is that while claiming brought forward losses, I'm getting an error that in schedule CG, table F, serial number 1, the breakup of all the quarters is not equal to the value from item 3, subclause 3 of schedule BFLA. In such cases, the taxpayers are required to add the breakup of capital gain income under table F in schedule CG, which should match with the net income remaining under serial number 5 of schedule BFLA, and then retry filing the return. The taxpayers, while claiming exemption of the leave travel allowance, are getting the error. Kindly restrict the exemption under section 10(5) to leave travel allowance under salary as per section 17 subsection 1. First of all, it is required to be noted that the LTA exemption is only available in the old tax regime. So if the taxpayers are paying their tax in the default tax regime, that is a new tax regime, the exemption will not be available. If the exemption is available to you, then you should add the breakup of leave encashment after adding the LTA drop down under salary chargeable under section 17 subsection 1 under scheduled salary for claiming the LTA allowance and then file the return using the latest offline utility or through the online mode. Some taxpayers are reporting that while claiming deduction in schedule 6A, deduction under section 80U for self with severe disability, they are getting an error that it cannot be more than the maximum limit of rupees 1,25,000. First of all, it is to be noted that schedule 6A deduction under section 80U is available only in the old tax regime. If you are opting for the old tax regime, then only you would be able to claim this deduction. If you are facing the error while resuming from the old draft file, then you are required to delete 80U line entry under schedule 6A and then retry filing or else continue filing in the online mode. Please note that in order to claim deduction under section 80U, filing of form 10IA is now mandatory. Another grievance is that income details for the selected business code under section 44AD should be entered. So in such cases, taxpayers should save the data after adding the business income details under schedule BP and then confirm the schedule and then retry filing. Another grievance that we are getting is corresponding income offered, gross amount and head of income is to be filled since TDS is claimed in schedule TDS, details of TDS income as per form 16A furnished by the deductor. In such cases, taxpayers should provide the details of gross amount and head of income under the schedule TDS and then retry filing the ITR. TDS brought forward an income and TDS under the heading deducted in the hands of any other person as per rule 37BA sub rule 2 should be provided in different rows. This is a valid error. Taxpayer has to enter the TDS details for the financial year 23-24 and TDS brought forward from the previous year separately in TDS 2 under scheduled taxes paid. A very common grievance that we are getting is old tax regime under section 115 BAC cannot be opted without furnishing form 10 IEA or the details provided in ITR is incorrect and other errors related to opting of old tax regime. Please note taxpayers have to file form 10 IEA for assessment year 24-25 in case they are opting for the old tax regime and then select yes within due date option in the return under schedule part A general information and mention form 10 IEA date of filing and acknowledgement number and then retry filing. Let us now look at some of the best practices for filing Form ITR 3. If you wish to claim the deduction and avoid adjustment under section 80IA, 80IB, 80IC, 80IE, 80IAC or 80IAB, please note that Form 10CCB needs to be filed within the time allowed to claim the deduction. The amount of deduction claimed in return should not be more than the deduction mentioned in the form against corresponding section and to the extent income available in Schedule BP after brought forward adjustment. Any difference may result in adjustment through restriction of the claim in corresponding section. However, please note, deduction under section 80IA, 80IB, 80IC, 80IE, 80IAC and 80IAB are not available for taxpayers who are paying their taxes in the new tax regime. For taxpayers who are claiming deduction under section 80JJAA, if they wish to avoid any adjustments, please note that you should file form 10DA within the time allowed to claim the deduction. The amount of deduction claimed in the return should not be more than the deduction mentioned in the form. Any difference may result in adjustment through restriction of claim for the said section. If you wish to claim the deduction under section 10 10AA, you are required to file the return within due date or extended due date as per Section 139 subsection 1 to claim the deductions under Section 10AA. However, this restriction is not there for claiming deduction under Section 80JJAA. Also, please note that the deduction under Section 10AA is not available in the new tax regime. So, if you are filing your return in the new tax regime, you cannot claim the deduction under Section 10AA. A best practice for reporting profit in Form 29C is that it should be reflected in Schedule AMT in the return of income. The amount of profit and other figures mentioned in return of income should match with the amount of profit and other figures mentioned in Form 29C. Also, please note that the provisions of AMT are not applicable for the taxpayers who are paying their taxes in the new tax regime. Can income chargeable to tax at special rate be shown only in Part B TI without giving the details of the same in the relevant schedule? Please note, income chargeable to tax at special rate needs to be shown in the relevant income schedules along with Part B TI. It is also very important to file your income tax return within the due date to claim the benefit of the brought forward losses. If the return for any year was filed after due date, then the loss is not allowed to be carried forward to the next year. Hence, the same is not allowed to be adjusted in the current year also, except the loss from house property, unabsorbed depreciation and allowance under Section 35(4). However, please note that the set-off of house property loss or allowance under Section 35(4) will not be allowable to a taxpayer who is paying the tax in the new tax regime. In order to disclose dividend income received under Section 222 Clause E, you are required to provide the details of such dividend income within the financial year in Clause 36A of Form 3CD. Further, the same needs to be offered in Schedule OS of ITR at appropriate places. You're also required to provide the quarterly breakup in Schedule CG on the basis of applicable tax rate. Further, the same should match with applicable rate-wise capital gain income remaining after set-off in column 5 of Schedule BFLA. Filing of Form ITR 3 is very easy. To know more, you may visit our website www.incometax.gov.in or contact our helpline numbers.